Welcome to the Deep Dive. Today we're heading down to Laredo, Texas.
Right to the border.
And we're looking at a city that is really at the center of two massive opposing forces. You have this incredible economic boom.
But at the same time, it's on the brink of this huge geopolitical uncertainty.
Its entire identity, really, is defined by being the #1 port of entry on the U.S.-Mexico border.
It's the perfect place for a deep dive. Because you have this structurally essential logistics hub on one side.
And on the other,
Sudden, massive regulatory shops coming straight out of Washington.
we've got a pretty dense stack of sources today. We're digging into industrial market reports.
Yeah, including a really specific prospectus for a warehouse on 828 Hallmark Drive.
And we're pairing that with analysis on the trade war threat, the tariffs.
And then we're contrasting all that high-stakes volatility with what's actually happening on the ground for Laredo residents. We've got housing data from Redfin, Movoto, Texas Realtors.
So the core mission today, the paradox we're trying to unpack, is this. How do these massive, uncertain geopolitical shifts immediately hit local industry?
And maybe more importantly, how insulated is the residential market from all that chaos? Is it exposed?
Let's jump in. First, we have to establish just how important Laredo is.
Well, its role is this. This anchor isn't new. It's been a trade center forever.
Since 1851, right? The first official port of entry.
Exactly. But it's the modern volume that really defines its power today.
It's easy to forget how big we're talking. This isn't just a big border town. It's the leading port in the entire country.
Beating out massive seaports, airports, everything. In 2023 alone, what was the number?
$320 billion in trade.
$320 billion, and almost all of that is moving by truck.
We're talking over 4 million commercial trucks crossing through Port Laredo every single year.
You can just picture it. The entire logistics spine of North America runs right through that one spot.
And that flow has been completely supercharged by nearshoring. For anyone listening who isn't in logistics, let's just break that down really quickly.
Sure. Nearshoring is, it's essentially U.S. companies shifting their manufacturing closer to home.
So pulling out of China.
Pulling production out of China, out of East Asia, and moving it to Mexico. And when that happens, Laredo becomes the mandatory pit stop.
And we saw that shift happen officially in early 2023.
Yeah, Mexico officially surpassed China as America's top importer, which means Laredo became the central point of coordination for, well, trillions of dollars of goods.
But this isn't just a lucky accident of geography. Laredo has really built the infrastructure to handle this.
Oh, absolutely. You've got I-35 going straight up into the Midwest. You have I-69 West.
And it's not just physical infrastructure.
Right, it's human infrastructure, too. You have local schools like Laredo College, Texas A&M International. They're constantly feeding skilled people into the system.
People trained in logistics, technology, transportation.
Which is critical. You need that for any kind of long-term viability.
Okay, and here is a detail from the sources that I think is one of the most important parts of this whole equation. The cost of that labor.
That is Laredo's secret weapon, really. It's one of its biggest competitive advantages. The average hourly wage there it's remarkably low for a major logistics hub.
Around $21.79 an hour.
Yeah, now compare that to the national average, which is what, over $31?
$31.48 per hour. That cost difference is massive for a logistics company.
It's everything.
Okay, so you have this perfect storm. Historic importance, modern infrastructure, and a huge labor cost advantage. That macro view brings us right to the local industrial boom.
And the investment growth it's just vertical. I mean, you go back to 2012, Laredo was seeing about $16.8 million in logistics investment.
And by 2023,
it exploded, $313.5 million. The amount of industrial space on the border shot up 18% in just 5 years, just to try and meet the demand.
let's make this concrete for everyone. Let's talk about a specific property, the warehouse at 828 Hallmark Drive.
This place is the perfect example of what the market wants right now.
So it's a mid-sized facility.
Yeah, just under 24,000 square feet, light industrial. And the sources highlight the key features. You've got 6 dock-high doors, good clear heights of 16 to 22 feet, and this is the big one, a full concrete yard with 30 trailer spots.
Explain why those details are so critical. Why aren't we talking about, the quality of the office space?
Because Laredo is a transactional market. It's not about manufacturing on-site. It's about moving goods through.
Got it.
Those dock-high doors, the clear height, that's for rapid loading and stacking. But that concrete yard with 30 trailer spots, that is the premium feature.
Why?
It means a logistics company can decouple the tractor from the trailer. They can hold inventory, maybe 3 days worth right there on the lot, ready to go. It minimizes the time trucks spend idling, waiting for an open dock. It's all about speed.
And the price tag on this place tells you everything about what investors are expecting. It's listed at $3.2 million.
Right. And it's currently leased, but that lease expires next December.
So the sources call it a lease-up or owner-user opportunity.
And the numbers reflect just extreme confidence that rents are going to keep climbing. The current cap rate, so the return based on today's income, is 4.02%.
Which is pretty low.
It is. But the pro forma cap rate, what the broker believes it could get if they released it at today's market rents, is a stunning 7.49%.
Wow. That's an aggressive jump. You're talking about a potential 85% increase in your yield.
It is incredibly aggressive.
And doesn't that bake in a tremendous amount of risk, especially given everything we know is coming down the pike politically?
It absolutely does. That jump in the cap rate is a direct bet that the nearshoring wave just keeps on rolling uninterrupted.
It's a bet that market rents will hold or even spike higher when that lease is up in December 2025.
It just shows you the appetite for these border industrial assets. It's so strong that investors are willing to ignore policy threats, pay a low yield now for the promise of massive growth later.
And the low vacancy rates seem to support that confidence.
They do, especially for these mid-sized buildings. The overall Laredo market has a vacancy rate of around 6.1%.
Which is healthy.
But for properties under 50,000 square feet, like this one, it was much tighter, only 3.5% last year. These facilities are the backbone, and they are basically full.
Okay, so we've set the stage. An incredible boom, intense investor confidence, but the foundation for all of that confidence predictability is suddenly gone.
And this is where it gets really interesting.
Let's get into the conflict that's paralyzing this whole economic engine.
This is where macro policy just slams into the micro-reality of Laredo. The certainty that came from the USMCA agreement, the thing that fueled nearshoring.
It's being violently interrupted.
By shifting U.S. trade policy and the immediate threat of tariffs.
And we've seen several layers of this. The 25% tariffs on steel and aluminum.
The 10% baseline tariff on most countries.
And then the really steep 145% tariffs on most Chinese goods. Even just the threat of these things is enough to seize up the whole supply chain.
And the market reaction was immediate. It was painful. The sources say leasing has slowed tremendously.
Tenants are just hitting the brakes.
Hitting the brakes on any new deals. And the flow of investment money is starting to slow to a trickle. People are just waiting.
It's more than a slowdown, it's a freeze. And we have real-world examples.
Just look at the auto sector. Stellantis. A massive, massive player paused operation.
In both Canada and Mexico.
Both. Just because of the uncertainty around tariffs. When a company that big hits pause, it sends a shockwave right through Laredo's entire network.
And what does that look like on the ground? It's not just numbers on a spreadsheet.
No, it's physical chaos. It's pure congestion.
Right.
The uncertainty means no one wants to be caught holding inventory that might suddenly get hit with a huge tariff. So goods get stuck.
The border crossings turn into nightmares.
3 to 4 hour traffic jams, and then all that overflow leads to overflowing warehouses because nobody is signing the next lease, nobody's pulling the trigger to move the cargo, it just sits.
And this is exactly why the Dallas Fed is sounding the alarm for Texas.
Right, because as the nation's biggest trading state, Texas is just exceptionally vulnerable.
They estimate Texas's GDP growth could get cut in half, dropping from around 3.2% down to a really concerning 1.7%.
And the existential threat, the thing Moody's Analytics warns about, is that if this continues, manufacturers might just recalculate everything.
They might rethink the whole nearshoring plan.
Exactly. If the risk and the cost of operating in Mexico or just trying to get your stuff across the border gets too high, companies might decide to skip the border entirely and go for true domestic onshoring.
But there's a counter-argument to this, isn't there? A sense of maybe pragmatic resilience from people on the ground.
There is. You talk to local industry insiders, and they argue that the economic ties between the U.S. and Mexico are just too deep, too tangled to be undone by rhetoric or even short-term tariffs.
They're betting on pragmatism.
They're betting that pragmatism is going to win out because the cost of ripping up these supply chains is just astronomical for everyone involved.
And what's their evidence that Laredo is indispensable?
They point to its structural centrality. Laredo isn't just a convenient crossing point anymore. It's the institutional hub.
How so?
The Mexican National Customs Agency literally moved its headquarters to Nuevo Laredo last year.
That's a huge bureaucratic investment.
It is. It reinforces Laredo's role as the permanent hub, no matter who is tweeting about tariffs. It suggests Laredo is, in some ways, too big to fail as a customs clearinghouse.
Okay, so we have this massive industrial world, huge investment, huge volume, but is currently held hostage by political indecision. It's chaos.
Total chaos.
It's hard to imagine anyone is thinking about buying a house when the region's main economic engine is sputtering.
And that is the beautiful and really surprising contrast here. When you pivot to Laredo's residential market, the reality for the city's, 269,000 residents?
It's almost boringly stable.
It is. The residential sector is acting like a shock absorber. It's showing a calm, slow shift toward balance, not panic.
So if we look at the prices, Q1 and Q2 of 2025, the median sale prices are all clustered together. Redfin said $250,000.
Movoto was a bit lower at $215K. The Texas Realtors report for the whole MSA landed right in the middle at $245,000.
Which was only up about 3.4% from the year before. That's very low volatility.
But that stability isn't coming from rapid sales. It's actually the opposite. The time it takes to sell a home has gone up a lot.
How much?
In the second quarter of 2025, homes were on the market for 74 days. That's a full 2 weeks longer than the year before. The market is definitely not frantic anymore.
And that cooling pace is tied directly to inventory. That's the key metric here, right? The one shifting things toward buyers.
Yes, exactly. We track months of inventory, or MOI. Laredo's MOI jumped from 4.8 months in Q2 2024 up to 5.8 months in Q2 2025.
And 6 months is considered a perfectly balanced market.
So we're getting very close. The market is rapidly becoming healthier and, frankly, easier for buyers, even while all the industrial investors are sweating bullets over trade policy.
So why is the residential market so insulated from all this?
I think it's two main reasons. First, the workforce is local. Logistics and transportation workers are often from the area. They're not as migratory as, say, tech workers who might move for a short-term project.
And second,
Affordability. It provides this deep layer of stability.
let's put that affordability in context because it's really striking.
It is. The national average rent right now is hovering around $1,631 a month.
And in Laredo.
The average rent is about $966 a month, dramatically lower. Even a two-bedroom apartment only averages around $1,100.
So that affordability, plus the educational pipeline feeding the local workforce, it means Laredo holds on to its people.
Right. It gives the residential market a solid foundation that makes it resilient to these short-term policy shocks shaking the industrial side.
The average resident is worried about rent, not cap rates.
Exactly. So you've got these two completely different realities. The residential market is stable, affordable, and slowly tipping in favor of buyers.
While the industrial market is massive, essential, and just gripped by this paralyzing uncertainty.
Which brings us back to that central conflict. The entire boom that Laredo has been enjoying, it relied on the predictability of the USMCA.
It relied on the simple math of nearshoring.
But the threat of new tariffs forces manufacturers into a brand new and much harsher calculation. Is it still worth it? Is it still worth dealing with the border congestion and the tariff risk, even with cheaper labor in Mexico?
Or does the new math suddenly make it better to just skip the border entirely, to find a spot somewhere in the U.S. manufacturing heartland that offers, comparably cheaper domestic labor?
And that is the billion-dollar question for Laredo. If companies decide that dealing with tariffs and logjams is worse than paying a slightly higher but still discounted Texas wage.
Like Laredo's own $21.79 an hour.
But building inland? Then the next wave of industrial development might just bypass Laredo completely.
If the city's greatest competitive advantage, its location flips into a vulnerability because of the political risk, this critical trade anchor could find its entire economic momentum stalled, even as the rest of North America is trying to bring its supply chains closer to home.
And that's the high-stakes outcome Laredo's industrial market is bracing for right now.